Welcome. I appreciate you joining us today. I'm Steve Beatty. We'll go through introductions in just a moment. But just to ground our discussion today, we are really focusing in on the topic of financial crime. And financial crime, we mean anti-money laundering, sanctions, other related topics. And for those not in the compliance field, the heavy anchor of drag on business profitability while still trying to be compliant with regulatory expectations. What we're going to talk about today is a new way of doing business. The old models of rolling out large numbers of people to undertake large-scale remediations or to run the compliance function doesn't apply anymore. We really do need to find more innovative, asset-enabled, innovative technologies, new strategies. So what we're going to talk about today is the reality of where we are, not the aspiration of where we might be in 10 years. We're still going to give you some context on that, but certainly we want to talk about those kinds of innovative solutions that Ernst & Young has been rolling out with clients, what we've seen in terms of the gain, how that's resulted in reduced costs and increased compliance and less regulatory pressure. So I think our message overall for today, we talk about harnessing innovation to really intercede on, to disrupt financial crime. It's a critical topic across the industry and a top board level issue on every bank in which we work. But before we get to that, we'll introduce ourselves quickly. As I mentioned, I'm Steve Beatty. Globally, I run our financial crimes advisory and operations solutions. My background is a mix of technology, compliance, operations, and as a result, bring, along with the other gentlemen on the stage, a unique understanding of expectations. It's not just about increased innovation and increased efficiency. It's about still satisfying regulatory expectations on both a local and global scale. Okay, so Jake, do you mind introducing yourself?
Good afternoon. Afternoon, everyone. I'm Jake Jacobson, a partner at EY. I lead basically the technology enablement of our offerings in this space, everything from some of the innovative work we're doing jointly with clients to some of the very specific proprietary product development we're doing, as well as kind of our alliance ecosystem. A lot of what we'll talk about today, is in partnership with other technology providers. So my role kind of broadly bringing along the technology, the innovation, enablement of some of the broader services that we'll talk about.
Good afternoon, everyone. My name is Hamish Thomas. Again, a partner at EY, and I have an interesting brief. So I spend a lot of my time looking at financial crime compliance in the context of the flows. In that context, I also lead our payments business. More specifically, I also run all the work we do across open banking, looking at APIs, the API economy, the data sharing economy, and so looking at that balance of the risk and the opportunity inherent in direction of technology. I spend a lot of time working with Jake and Steve, and I lead the solution which we call the Digital Passport, which I'll talk to you about a little bit later.
Okay, so if you're here, you know that anti-money laundering, financial crime is a pervasive issue across the industry. It's a social issue. There's a moral imperative for intervention, right? Firms have struggled with this for years, and it's hitting an all-time high in terms of spend and in terms of effort to be fully compliant. Yet you still see a number of regulators criticizing firms both in the public domain and through consent orders, cease and desist orders, and other related topics. So it certainly remains a critical issue. I mentioned earlier, a board level issue. I have a very difficult time, and I've met with a number of boards across financial services where between cyber and other related topics, fin crime isn't top 3 on the agenda. Why? Well, you're also seeing an era of increased accountability. If you're a compliance officer, you're a key business leader, the first line of defense, if you're working within the board, we're seeing more and more of a trend of regulators looking to place greater accountability. In the U.S., we've seen some rules rolled out having to do with specific sign-off, having to do with the effectiveness of your programs. And that has really sent a shockwave through the industry. While one always felt it was a responsibility, this is really up to the ante in terms of accountability. And that has really increased the focus on this. So what happens when there's increased focus? There's increased innovation. Because the moment it's on the board level agenda, you're seeing massive spend. And we've worked with firms who have stood up thousands of people to remediate KYC files or deal with false dispositions having to do with transaction alerts. We're looking at some very innovative strategies to try and work around that. And then the other dynamic here is in building to where we are today against this backdrop of money launderers, terrorist finance, and others who are participating within the industry and using financial services on this. The reaction by the industry has been one of, let's throw a lot of people at this problem. Let's build up a capability. And that's over the last decade. I think that we've seen that. So with that build, oftentimes through compliance people, there's been less operational skill set. There's been less innovation on technology. People have rolled out transaction monitoring systems. I don't think I can name one who felt their first rollout was fully efficient and optimized in terms of coverage. So when you combine this very, very difficult storm of increased pressure, increased regulatory expectations or accountability of firms to go through here, and the fact that these programs were built in a response to that has really led to a new era of opportunity for innovation. And that's what we're going to speak to today. Okay, Jake, if you could talk a little bit about the life cycle of what got us to where we are now and where we see this going to in the long term.
Yeah, of course. So, I think anyone who's been in this space can recognize the level of investment and effort put into the first wave of controls, first generation of controls, let's call it, that have now been installed across the industry. Of course, not all institutions are at the same level, but if we take a step back, think, in context, kind of at a macro level. Those controls have consisted of, as Steve mentioned, a lot of sort of rather simple rules-based systems, in a lot of cases still surprisingly manual and paper-based processes, especially around customers. And as a result have driven, while institutions are achieving compliance and adequate coverage of their risks, tremendous operating costs. And so, given the elevated attention on this issue, as we move from this kind of first generation, there's really a wave right now of massive technology upgrade happening across this space. I don't think we talk to any client who isn't, deeply interested in pursuing, and in many cases already installing and bringing into production next-gen technologies to address some of these issues. And so that's really where we're at today. At least we feel there's a high level of experimentation. There are some very real and practical use cases that are being addressed effectively with these new technologies, and those are being moved off the experimentation page into deeper tests and even production in some cases. And then the other dimension that's coming in, kind of the third step in the horizon, is our clients are saying, listen, for us this is a cost of doing business, and as a result, sometimes it's hard for us to drive the right talent, the right innovation, and just a lot of ways the right attention into kind of moving these programs forward. So they're starting to ask for and look for different models where they can partner with value-add providers to say, listen, I want you to not only provide an input into the process that I'm building, but I want you to be accountable for an outcome that I need to maintain the quality of my program. That's not to say they're looking to outsource the process or outsource their risk. They're really just looking at, if you look at the components of their process, which of these things are going to be better suited by a third party providing them for me. And then the last wave that we're seeing, increased attention around is the idea of collaboration within the industry. So whether it's a utility concept or a consortium idea, this has been bubbling under the surface for at least a decade. Mm-hmm. There's been a number of false starts, in the industry. We are seeing renewed focus on this. And, what we really think is that these will become a material element within the next decade, but it will not be overnight. And we think that many of the things that would actually be accretive to the problem are going to be targeted use cases around sharing of data, really not process consolidation. Because if you think of the largest institutions out there, it's hard for them to even reconcile their process across all their lines of businesses, geographies, et cetera, let alone across a large number of institutions. So, really around targeted sharing of data, reuse, and where, that data can come together and bring significant value in sort of an API kind of way. So, with that in mind, moving to the next page.
Sure. And if you don't mind me adding on the operational considerations, the industry collaboration, you raised some really good points about the challenges of large, complex firms having a singular view on operational processing and convergence across the industry. Another overlay, the example you gave from 10 years ago, was regulatory agreement, regulatory cooperation, understanding more of an open environment of having some single view of Steve Beatty or Jake Jacobson or Hamish. So we recognize that some of these efficiencies are outside the realm of innovative technologies and actually have other stakeholders that have to be considered as you go through there. So certainly an understanding of how complex this really can be.
Yeah, the governance and operating models around those things are not simple. So at the core of this technology upgrade, everyone hears the buzzword techs, around machine learning, AI, robotics, blockchain, et cetera. There is a difference between the hype cycle and what's real. And the truth is there's a lot that's real here, but there is kind of a high degree of hype as well. What we are seeing across this space is a high focus on, and especially in the innovation that we're driving, the solutions that we're bringing to market, a high focus on data management, analytics, and automation, right? This is where the value is coming. And, our philosophy in terms of integrating this into a complex enterprise environment is to take, an open approach, right? So if we talk about that first wave of controls that came through the industry, they were primarily based on totally vertically integrated or monolithic applications, right? What we see as the way forward is an open ecosystem, a toolbox, if you will, of different value-add components that can be inserted quickly to bring value and then also replaced and upgraded as new innovation comes. So the one thing we know is the innovation over the past 3 years we think is probably representative of the rate of change we can expect over the coming decade. It's not going to be like the first decade of this problem where we took 10 years to install a rules-based system. So, the way that we look at this is kind of in a layered architecture view of having a platform, a big database platform that allows you to integrate different analytic tools, different automation tools, different process tools, and have a very pragmatic view of what brings value to what specific use case, as opposed to relying on one specific application. So we'll get into some examples of this on the next page with some of the real solutions that we're building with clients. But really, again, getting back to where the value is coming from, you still have to source all the data. You've got to get the data right. All these projects are always about data. And so, part of differentiating that hype versus reality is, big data doesn't just let you sort of skip past all of your data quality problems. So a lot of focus there still on data quality, data governance, et cetera. And then moving into the analytics space, we think of analytics as kind of where the business domain knowledge and the technology intersect, right? This is where you start to extract value from your data. And then driving into the execution later with better orchestration. If we look at, in particular the KYC space, a lot of manual workflow and paper-based processes. So if we talk about all these exciting technologies like AI and automation, et cetera, there's still really some core blocking and tackling technology integration that needs to happen, right? Things like basic workflow within KYC processes, et cetera. And then, of course, the last layer of just providing better insight top-down into the program, visualization, dashboards, et cetera. As we organize, this integrated technology stack, being able to get, a clear view into your risks, your model management life cycles throughout the stack, all these things become more and more practical. So, you want to add anything, Hamish?
No, I think from my perspective, just picking up the API piece for a second. I think why that I think is particularly interesting, and we'll talk about it in a second, is when we start looking at the direction of travel in terms of that sort of integration execution layer and think about the enablement of, in particular, data sharing, where we start thinking about open banking and how that then begins to overlap with some of the things we're talking about here. It gets very interesting, both in terms of how organizations can collaborate in terms of managing certain aspects of financial crime risk, but also what is the value proposition for end customer. For many of the initiatives that we see organizations looking to achieve, particularly around data sharing, better understanding of customer, it is really important to have a value proposition for that end customer, particularly in certain jurisdictions, Europe being a great example, something like GDPR, where permissioning of that data exchange is really important. So it's not just about solving for the risk and operational cost challenge that might exist within an institution. It's also about doing so in a way that has end customer value to actually grow the ecosystem of trust around sharing of data. And that API economy, as we often call it, is I think an inherent part of that. So the API economy is as much about helping to manage the risk of the ecosystem as it is about releasing the opportunity within it.
Okay, so now a lot of that was backdrop in terms of how we got to where we are, what the business imperative it is. And this is where it starts to get real, where we're going to talk about what we're actually doing at clients, what's been the benefit of this. And candidly, in our discussions with clients, they're so thirsty for some tangible, real, implementable solution for this, they drink sand if you offered it to them at this point. There's just finding enormous pressure on costs. Yet, as I shared in the earlier part of this, with increased focus on accountability, we're finding compliance officers and AML officers and others in related fields to start to feel they're in the crosshairs. Okay, so a lot of what we're talking about here, you probably noticed, is a combination of operational technology as well as compliance mindset and skill set. And a senior leader in the industry has shared that with me once. If you guys can figure out how to combine those up so you're actually thinking not just chocolates on the conveyor belt, but also how to deal with the risk of noncompliance and understanding of that, that's going to be very, very important to the industry. So we'll start first with FinCrime operations, managed services, right? You're used to it. The old model, let's just take some really cheap resources, have them do it from a remote location. I can't tell you how many good friends I know who unwound those positions as they found them to not be compliant, and there was such a challenge with getting them overlaid with the right skill set, they had to bring it back and ultimately spent more. And then, of course, you add in the overlay of regulatory internal audit review, and it becomes a significant challenge. So our FinCrime ops-focused solutions are really asset-based solutions where we're focused on content domain, or really understanding, people trained and understand the most rigorous regulatory expectations. We mentioned we'll go more into technology innovation, and we'll talk about that through a combination of robotics, artificial intelligence, and other innovative solutions. Still first generation, I would say. This is going to continue to evolve. Global scale and reach. How many clients can deal only with local solutions at this point? Whether it's moving operational functions offshore and figuring out where's a viable hub, do I have the right skill set? And remember, there is a war for talent on these topics and really winning in that battle. And then obviously, and very, very importantly, quality of outcome. At the end of the day, if you're not delivering that kind of quality, the cost save won't matter when you're having to explain to a board or an audit committee or a regulator where things went sideways. So, again, it's not trying to be dark storm, but just recognize the business imperative, not just compliance imperative here. So, key element to this, Cognitive Investigator, a suite of technology solutions that we pulled together to better enable where we have targeted service delivery centers in key locations, skilled people who've been trained on U.S. and other strident regulatory expectation, and then enabled with innovative technologies. So if you don't mind speaking a little bit about that, Jake?
Yeah, sure. So Cognitive Investigator is, I think to be, rather direct, it's undifferentiated technology. Today, machine learning, robotics, these are becoming rather ubiquitous. So it's not about that. Really what it's about is the regulatory domain experience that's built into developing the models, right? Defending the models, deploying them, and then defending them on an ongoing basis. So that as you start to implement controls that will let you, for example, close false positive alerts automatically out of your transaction monitoring system, you really understand that you've got the right controls around the control, right? Because this is probably one of the biggest issues that most of our clients are facing today, even when it comes to satisfying model governance standards for simple rules-based systems. So, getting over that hump and being able to say, yeah, so we're adopting machine learning, we're adopting robotic, we're starting to straight through process some of these alerts, and then being able to really stand up and explain and defend everything about that. So we've got a short video here that'll explain some of the value. This is a transaction monitoring-oriented use case.
So for those wondering, we actually don't have a robot throwing stuff in boxes, but it's good articulation of it. So when, one point I think on the business side of this, it's important to note where we have employed these alternative solutions, integration of technology, properly skilled people, and really thinking through the operational and compliance aspects of this. Our general cost savings have been in the area of 40%. Now, if you take the billions that are being spent across compliance and anti-money laundering and other related offerings, sanctions, and so forth, those are astounding numbers. And that's what we've seen. So an increase both in terms of quality of outcome, because of the points you had raised about higher quality, machine learning, less prone to the common errors that we've all seen who've worked in this field, and then significant cost reduction.
And just the last thing I would say is, our approach with this kind of thing is to have easily integrated lightweight technology that augments the current environment, because there's really no place right now for massive long-term rip and replace kind of strategies. Should we head to digital passport?
Yeah, let's do that.
So on the this is by way of intro. So the digital passport, this came from a piece of work we did with 3 of the big banks in the UK, who came to us with a question around, I guess, the KYC utility question, but focused very much on the SME market, and thinking not only in the context of some sort of mutualization of cost and beneficial collaboration, but also the context of open banking and the move towards customer-driven sharing of data. And so where we ended up with that is, having worked with them through a series of sprints to build out what the use case set would be for an MVP, a minimum viable product, it became very apparent that some of the chip stacks that are often hit here in terms of attempts to unify process and policy, attempts to unify risk appetite, are too much for many institutions to face into right now. But there is inherent value in enabling a trusted network of shared customer data in a way that is transparent, is permissioned, can be controlled by customer, particularly in the context of other regulations such as GDPR and open banking. And really that's where we ended up in terms of a technology platform which enables the permissioned, auditable, secure exchange of data either within, for example, business divisions of a single entity, but also across industries, between institutions, between industries. So a business who wants to open a bank account here can then port that data on a permission basis to another institution for a new product, or to a telco or a utility. Again, back to my point earlier about value proposition. In order to get the data into the system that drives the value from a risk management and a customer understanding perspective, there has to be a value proposition for customer. If you create a level of data portability for them to enable the way they do business, then that drives the adoption. Without that adoption, you end up with an infrastructure that no one is using, which doesn't benefit anybody. But again, we have a short video which we can show about the digital passport.
In today's world, customers can transfer money on the go and pay for everyday items with contactless cards and mobile devices. But when personal or business information is involved, we still ask customers to fill in paper forms. This physical collection of information continues to drive complex and costly processes, resulting in smart financial professionals spending too much of their time verifying customer data. Digital Passport addresses this problem by providing customers with a secure and digital way to manage personal and business information for relationships with banks, utilities, tax authorities, and many others. When a customer moves premises and updates their details with one organisation, the new information is shared with all the others, enhancing trust in that data within the wider network. Financial institutions can access up-to-date information, and they have visibility of which other organisations have verified or validated it. Paper forms take days to check, and the checking processes are subject to human error, increasing the risk of compliance issues. With the secure and standardised mechanism provided by Digital Passport, institutions have increased confidence in the provenance and trustworthiness of customer data. Smart financial professionals are spared time checking data and freed up to get on with their jobs. And by allowing people to manage their personal and business data as easily as buying a coffee, customers have never had more control.
But just to finish on that, I think that to the point that Steve was making earlier in terms of collaboration and stakeholders, clearly there's a whole raft of business, financial institution, other sector, government, regulator, and the conversations we've been having across multiple jurisdictions very much reflect that in terms of convening all of those stakeholders it would take to actually create this network, which is challenging, but what we found is the promise of the endpoint is enough to keep people engaged in that conversation.
And what I'd like to do, if you don't mind, in the interest of time, maybe just a soundbite on Track and Odyssey, but clearly there's interest in learning more about these and other innovations. Coming by our booth, we're happy to spend half an hour on any one of the topics because they do warrant a much deeper dive. This is really just to introduce you to the art of the possible here. So, Jake, do you mind a quick overview of Track, please?
Yeah, so starting with Track. Track is a solution specifically targeted at the trade finance industry, which is a big open gap in many monitoring programs today being solved with manual processes for the most part. So this is a solution that we've built with our partner SaaS software. It is an analytics as a service platform that we are deploying with at least 2 banks right now, soon to be more. That really automates all the red flag checking that today is done manually within the core trade operations function. The value prop here is to sort of up the compliance game, but also really start to address the high operational costs that have started to overtake kind of the trade function. 30, 40, sometimes 50% of the time spent in the back office trade processing function is compliance oriented. So that's a big opportunity to take time out. Okay. Odyssey is a solution targeted at rogue trader and trade surveillance. It's really a signal aggregation platform in the cloud that can look at structured and unstructured data, voice, sentiment analysis, et cetera, and really very quickly implement the controls that many institutions are trying to improve currently, really around that entire trade surveillance and trade compliance function.
Great, thank you. I'd say in summary, though, in respect of time here, key messages for us here: if you're not innovating in this space, you're going to be behind the industry. This topic of smart compliance, staying out of trouble, finding different operational models is constantly refreshing within the industry. Why? Because those who are trying to take advantage of the industry are innovating even faster. And without the use of innovative technologies, alternative people models, and really finding ways to divert the resources to those things that are most critical. Because I've had some leaders in the industry ask me, well, 40% reduction, what do I do with those people? You put them onto jobs that are more thinking jobs, to where they're applying their critical thinking, they're building new skill sets. How many of you are spending time or have team members who are spending time mindlessly and rotely going through Google searches to help with your KYC file refresh? The era of that kind of operational process is past, so if you're not innovating, you'll be quickly behind the industry. But certainly on any of these topics, if you'd like to have a further deep dive discussion, I would just close by saying these are current state. We continue to innovate because the industry does. The availability of innovative technologies and new strategies continues to evolve. And just like you, we need to stay on the forefront of them. Any other closing thoughts, gentlemen?
No, I think we're out of time. Any quick questions from the audience?
Yeah. Mm-hmm.
Transformation standpoint. I mean, a lot of what you said makes sense, but they're all incremental. They are old problems that we're applying, sort of, the 40% cost cutting, the alerts that are generating false positives. These are traditional issues, right?
Right.
And the only way I think we can solve it, either from a banking standpoint, is through complete transformation. There are ways to transform the place. Now, what I was hoping to hear is what are some of the disruptive things or transformative things that you guys are working on from an analytical technique standpoint?
So I think that depends on the specific domain within FinCrime. Yeah, because on the transaction monitoring side, I think it is more the case of incremental innovation, large systems in place, layer on incrementally valuable technology. That might be a low lift from a technology standpoint, but going to have massive impacts on the operational side of the business. On the KYC side, there is mass transformation happening, and I think that's where the managed service idea comes to play. So clients are really stepping back and saying, am I going to spend the next 3 years completely re-engineering my customer onboarding, my customer risk rating, my customer refresh process, people, process, technology? Or can I look to accelerate that by bringing in a third-party provider that already has that toolkit, has the operational capability, and can really give me a big leap forward in my capability? I think that's an area that's big innovation. That is also where we're getting into more core tech enablement. So it's not about AI transforming KYC. It's really, do you have an industrial-grade technology-enabled operations function with workflow and OCR and all these basic technologies that are going to solve for the paper-bound nature of the process today? So, is it an issue or is it a case where you've got some, incredibly disruptive technology coming in and completely taking over a space? We're not seeing that yet, right? What we are seeing is kind of that adoption in a measured way of the technologies where they can have immediate value, and then really looking at where do we have to completely transform a function, and how can we best achieve that on a timeline that isn't at normal kind of bank speed.
I mean, if I could just add to that quickly, and then go, if you don't mind, is I agree with you, the complete transformation. I've worked with firms on that. They set out whether it's a one KYC strategy, some global scale. 5 years later, they're still working on it. I think that's an underpinning that goes on. But the industry is demanding now, what are some ways to work around through innovative technologies the embedded data issues that exist within every financial services firm? You can wait until all the data issues are resolved. Might occur in my career, might not. Or you can find what I'll loosely call a workaround of robotic or some other means to really start to connect that which is not easily connected within the large, complex banking organization. So I think, to your point, there's still a need for transformation. I think we'll see a full turnover of transaction monitoring capabilities, for one example. But the industry can't wait. They need to find other ways to still deal with trying to find a needle in a needle stack for that kind of example. Yeah.
Sorry, he's got a microphone here.
I got it.
Oh, I'm so sorry. I didn't.
Okay.
I just thought you brought that with you. I didn't.
Alan from Fiserv. Really interesting, the open banking, digital passport. I really like it. The regulatory feedback that you might have had from FCA, FATF, have you had any comments from them, as neutral as they will be?
Yes, so I think you've hit the nail on the head, clearly, because I think from that perspective, there's a couple of things. So in some jurisdictions, I think we've seen everything from neutrality to, if you like, cautious enthusiasm, if I could put it that way. Because the problem statement is well understood. And I think the open banking thing is quite interesting because the problem statement is well understood, let's face it, it's a pretty old problem statement. The question is, well, what's different that means something will change now? And I think that broader data sharing, open banking paradigm is what is beginning to encourage, at an industry level, a working together to learn how to share better now, together, rather than to try and do it individually and sort it out later. In terms of regulatory feedback, I think neutral, interested, but one of the other things that we're seeing is what we're not suggesting inherent in that is any transfer of liability. It's about the transparency of the permission data sharing, who's used it for what purpose, the full audit trail. So your risk decision on the provenance of that data is better informed. You can then start driving your operational costs and how much extra work you do based upon the history. And that's a risk appetite policy conversation as opposed to a moving of the regulator's position conversation, which again is one of those trip steps that we had to sort of navigate past when we look at the MVP with a group of banks. To answer your question. Yeah. Yeah. And so I think we're quite lucky, given who we are, to be in that sort of conversation with the likes of the FCA in terms of what is happening in the technology space, where it might go, conversation about sandboxes, all those sorts of things. So I think regulators are getting there in terms of building their understanding to be supportive, depending on jurisdiction, as to how some of these new technologies could genuinely begin to be transformative. But I think back to the first question, I think it's about transformation of outcome. That doesn't necessarily mean transformation of whole tech stack. And that's, I think, a split that's really important. You don't have to rip out all of your old technology and put in a bunch of new stuff to actually achieve a transformative outcome. Yeah, exactly.
Now, out of respect for people's time, I actually do see there are some other questions. We'll be here. Certainly and I actually see the hook coming up. But certainly feel free to come by and see us. Normally these conversations are a bit more in depth, but if not anything else, just a slight primer on some of the things that are going on and might be of interest to both you and your organizations. And thank you for your time.